Is anyone brand new to these sessions? And, we always cover the same strategy in here and apply it to all the markets that we look at. But is anybody brand new to the strategy that we talk about in here? Just, the whole supply and demand concept? Okay. All right. So, two things. One, there are many recordings, and I think you could find a lot of them on the FX Street website that help explain and are more lesson based than what we'll do here today. But I will try to explain things at a very basic level, and at the same time try to go over as many markets as we can. But again, there are videos. I believe they're on the FX Street website. That, they don't cost anything, I think. But anyway, okay. So with that said, why don't we jump in and maybe the first opportunity that we go over, first set of charts we go over, I'll explain things in detail, and then we'll go from there. Okay, so let me get you to, here we go. All right, let's start with the dollar. And let me just pull up a chart here, and I'll explain what I'm talking about. Where's the chart I'm looking for here? Here we go. Okay. Not that one. Well, let's start with the daily chart of the dollar right here. Okay. So for those that are new, I'm Sam. Good to see you. And we've been doing these sessions for a long time. I started my career on the trading floor of the Chicago Mercantile Exchange many years ago. And I worked on the professional side of the business, right? Banks, institutions, all that. My job was to facilitate order flow in the beginning. And from there, you see where banks and financial institutions are buying and selling. And pretty quickly, you start to understand exactly how and why prices move in markets and exactly how and why money is made and lost in markets. And it all comes down to just pure supply and demand. Now, we can talk about all the influences on price, like economic reports and news events and coronavirus and all this other stuff. But at the end of the day, any and all influences on price are reflected in price. Because if you think of any kind of news out there, be it a financial report or some news event or anything you could possibly think of, all that stuff causes thoughts and perceptions, right? Those thoughts and perceptions end up being one of three things in the market: a buy, a sell, or nothing, right? So we don't care about the nothing, but the buy and sell is what we care about. And at the end of the day, you can see with a high degree of accuracy the footprints of where banks and financial institutions, or just call it the big smart money, is buying and selling. Now, how do we do that? I was turned on to conventional technical analysis long ago, but it never made any sense to me because I had already experienced, the trading floor days, right? I already experienced that. And what you see is, you got to think about it, right? At the end of the day, there's two questions that matter. Where is price going to turn, and where is it going to go? So let me share something with you here. Hang on a second. Here. This is a screenshot from a session that I deliver each morning to members at the Academy. But can you see the screen okay? This is coming up all right. Whatever market we're trading for any financial purpose, right? Stocks, futures, Forex, options, daily income trading, weekly income trading, monthly, whatever it is, longer term wealth, whatever. It all comes down to answering these two questions. Where will price turn, and where will it go? So let's answer those questions. And when we do, just be very honest with ourselves, right? Again, this is not like nobody owns this strategy. Nobody owns supply and demand. It's just that, few people talk about how the markets really work and operate, from that. So I'm just trying to be the messenger here. If you think about the first question, where will prices turn? Unfilled orders or supply and demand cause prices to turn. Now, when I was on the trade desk, okay, and these weren't the only orders in the market, of course, there were others, but you would see if you had a big stack of buy orders, for example, at a specific price that was lower, prices would come down to that level. And if you saw that other big firms in the area had had big buy orders around the same price level, well, you could tell pretty quickly that demand exceeded supply there. So price would come down to that level, right? You'd have some sellers there, but as soon as the last sell order was filled, you had a lot of demand left over, price would rise, and it will rise every time that equation is like that, right? We all get that? So prices will fall until they reach a level where demand exceeds supply. Then, they'll rally until they reach a price point where supply is equal to or greater than demand. And that's how we define where prices turn. If we all agree with that, then the second question, right, doesn't become that difficult. Where will prices move? So once prices turn, where are they going to move to? Well, if unfilled orders or supply and demand cause prices to turn, filled orders or the lack of significant supply and demand facilitate price movement. Does everybody understand that? Okay. Big significant supply demand imbalances cause prices to turn. The lack of that makes it easy for price to move. Is everybody pretty clear on that? And if we all agree with that, then the only question left is, what does that picture look like on a price chart? All right, so let's go to the live markets, and let's focus on some opportunities and see what this looks like. So here we have the dollar coming down to, it's falling to this price point. Well, what leads us to believe that demand exceeds supply here? Well, think about it. For a certain period of time, price was trading sideways. All of a sudden, there was a strong rally from this level. Price went up for 4 days in a row. Okay. Why couldn't price stay here? Why did it have to move higher? Obviously, at the time, demand exceeded supply, right? Okay, so we wrap our two lines around this level, creating this demand zone or buy zone. Another word for demand, wholesale prices. Make sense? So we also see that price was able to go all the way up to here before moving lower, suggesting that significant supply is either at 98.20 or higher. And we have some up here, but we'll talk about that in a minute. Next, so when price comes back to this level, as a buyer and seller of anything, right, which is what you are doing in trading, investing, or buying and selling anything in life, one of the questions you always want to ask yourself is, when you're buying, who are you buying from? When you're selling, who are you selling to? Just ask those simple questions. In this case, if and when price gets down to say 97.60, which would be our demand zone, who would be? We've already kind of answered the question, who's likely buying here? Obviously, there was more demand than there was available supply. That's why prices couldn't stay here and rallied away. So you probably have some smart money that bought or is buying down here. But what about the sell side? When price comes back here, who's selling? Well, think of it this way. Who would sell after a drop in price and into a price level where the chart is already suggesting demand exceeds supply? Is it someone with the mindset that consistently makes money trading or doesn't? Follow me? And if you're new to the trading world, and whatever market it is, doesn't matter, it's always a good question to ask yourself because it'll help you decide whether it's a trade you want to take or not, right? Because at the end of the day, you need to be comfortable with the risk that you're taking on. And to be comfortable with the risk taking on, you need to really understand, are the odds stacked in your favor? Are they not? Are you buying from someone who consistently makes money? Are you buying from someone who doesn't? So we have a demand zone down here that we would expect prices would somewhere in here stop falling and turn higher and head up to this area here. So when that happens in the dollar, we can also look at markets like the euro and see if the euro is coming into a supply zone, for example. Now, the euro recently traded off our demand zone. These are all sessions from, let's see here, there we go. So we recently had this buying opportunity from our demand zone. Price came up to supply, then down to this new demand zone, and now the euro is moving higher, right? Kind of as it should here. Let's go to a smaller time frame and see what the euro is coming into. Before we do that, who's been with us at least for the last year? Right? This is what these are the levels that we've had on the weekly chart of the euro for, wow, going back a long time, a really long time. So all that's happened is prices have gone from supply down to demand, and now the range is tighter because we have new levels. Well, you always want to make sure you understand where you're at in the bigger picture, and there you have it. By the way, as I go through these markets, we can look at any market you want to. It doesn't just have to be the FX markets. If you have a Forex market you want to look at, something in the equity index markets, the futures, really any market you could think of, we can take a look at it. Okay, stocks, futures, Forex, options, you name it. Yeah, we can definitely look at the NASDAQ. Why don't we actually go to the equities for a moment? And in the NASDAQ's been a big mover for us. So let's see where things are at here. So we recently had a rally off of our demand zone here. And then yesterday, prices came into a supply zone for us here. Went through a little bit. This is a level that we gave in the session yesterday. But nevertheless, it turned in that general area. But so where's the NASDAQ likely to go from here? Well, it's an easier question to answer looking at the S&P or the Russell. But as far as the supply side goes, okay, that level worked out fine. So let's get rid of that now. The next smaller time frame supply zone, I'll get you there. Hang on a second. Whoops. Hang on just a second. I'll get you there. There we go. You want to make sure we are up in here. Okay, now let me scrunch this up. So we want to look above this. As far as supply goes, we need to look above this range right here. Okay. So this level worked out fine for us yesterday as far as kind of a day trade type area. Now we have a level up here. This is not a high probability level at all for a number of reasons. But nevertheless, if price is going to turn, it's likely to turn here. Anybody that's been with us, why isn't this a high probability supply zone? It's certainly not a level that I would take. I wouldn't be surprised if prices turn there, but it doesn't meet the criteria that I look for. It's fresh. Price almost came back here, but it didn't. Oh, maybe is it fresh? I thought it was fresh. Yeah, it is. The reason is, look at all this trading to the left. You see that? Yeah, price stayed there too long. So the fact that price stayed here, was in this area so long, suggests that there's probably not a big supply-demand imbalance at that area, okay? Meaning, if supply and demand was that out of balance, how did price stay there that long? Make sense? So not a high probability level. I don't take those levels. But the main thing you want to focus on here is the fact that over the last week, price came down to our demand zone, rallied up. Inside this range, let me start with the end. Expect the range to be quite big, quite large over the next few days in the NASDAQ. Why? Because we don't have fresh supplier demand levels close to current price. All right. Price came down to here, which means, yeah, there's just not there's not any significant supplier demand close to current price. If there was, you wouldn't have this big range, right? So we saw where the top is yesterday into our zone. We've got our demand down here. Let me take you to this chart, though. This is the key chart right here. Okay. There we go. So see all of this trading activity in here? The reason why you get so much trading activity in here is because there's nothing to stop all that trading activity from happening. The only thing that would prevent all of this trading activity is a significant supply and demand imbalance. If you had that, price would trade at that price for a period of time and then take off and not come back. But you don't. Price just stays here. So if you're looking for a higher probability place to buy according to the strategy, you really kind of need to wait for price to get below this, closer to the 88.90 area. Doesn't mean there's not little day trading levels that will come up that are closer to current price. There are. But if you're looking for higher probability stuff, a little bit bigger time frame, there you go. Okay? That makes sense? So you'd want to start watching just below 8,900, closer to 88.90. That's on the demand side. We go to the S&P, and these are all levels that we go over in the morning sessions. I know we've gone over some of them here. Good question, Kim. And how do you determine if a zone is fresh? Has it since the level was developed? Has price been back to the level yet? Meaning, like this one, once we put that level, once that level became a level, we put it in, it's fresh until that. Once price came back there once, which it did earlier in the week for us, it was a fresh level. It's not fresh anymore. However, we don't, just because a level is not fresh doesn't mean it's not a trade that we can take again. Instead of what a lot of people do is they say, oh, price came back to that area, that level a number of times, so don't take it again or take it again. According to the strategy, what you want to focus on is how deep did price move into the level? Because remember, in each of these supplier demand zones, you have multiple price points of a supply-demand relationship, right? So the fact that price just touched this level and took off doesn't that suggest that there's quite a big supply-demand imbalance there? Does that make sense? Okay, so in this case, we'd be expecting another bounce out of this area. Yeah, so just reading back in the chat here, someone's asking how do you define these zones? So again, I'm going over a little bit of that today. Again, I would suggest that you watch some of those videos, or the next session we have together, we can go deeper and deeper. But that's a big, obviously, question and a whole lesson. So, but you can watch the videos. A lot of that's in there. Do you track performance with statistics? Between some of the services the picking services. There's some stats there. Do we see every statistic of every one that trades a strategy? No, right? There's thousands of people that do that. I look at my own stuff. We all look at our own stuff, and it depends on what you're looking at. Are you looking at someone's real account? Are you looking at the services, maybe an online trading academy or somewhere else? So, and it also depends too. It's a good question because you can take trades. Let me show you this, right? So here we have supply, demand, and relative balance in the middle. Obviously, we don't want to, it's not a good idea to take trades in the middle, but there's opportunities in the middle. For me, for example, I'm going to have a lower trade count than a lot of people that I know. Why? Because I like to find opportunities that are likely to be out here at the demand extremes, out here at the supply extremes, and not in the middle. Where other people might want, are looking at and looking for more opportunities, and you'll find them in here. It's just your probability of success is going to go down. So, right, in theory, if you're finding trading shorting opportunities that are out at the supply extreme and buying opportunities that are down at the demand extreme and staying out of the middle, your trade count is going to be lower, but your success rate should be higher. Your overall profit should be higher. If you're finding trades in the middle here, your trade count will be higher, but your success rate will probably be less. And we can continue to go over all that stuff. So here's where we're looking in the S&P. There's other levels that we'll go over in just a minute here. Let me just make sure I'm caught up with the chat. Yeah, the basic strategy, Paresh, right? Again, it's just pure supply and demand, looking at any and all markets and quantifying the supply and demand relationship in there based on the picture that represents that. Okay. Yeah, we can certainly look at the yen in just a minute. Got us. No, we don't really bring anything else into it like divergence or any of that stuff. Yeah, so pivot lows and pivot highs, and I'm kind of answering two questions in once there. Pivot lows and pivot highs are not in and of themselves supply and demand zones. Okay. 3320, let's go look at that. Let's see, the 3320 probably came from, let's see. So we did have a level, we did have this level in yesterday, okay? So some members in our session reported that they took that. Again, I haven't verified those, but some people said that they took this. These are levels we had in yesterday. The two fresh areas above started 3308 up to 3316. Now those levels are inside here. So let me go back. Let me blow up the chart so you can see these. There they are. These are fresh levels. Notice we have two on top of each other. Notice the base and the drop. Notice we have opposing levels to the left. And like someone asked before, are these levels fresh? Well, since the levels have developed, has price been back to this area? And when we look, the answer is no. Right? Okay. The reason why I didn't take this area out is because yesterday price just touched the level and fell, suggesting that there's still quite a bit of supply up there. Now notice in the early going here today, price is churning at this area here. Now this is an overnight supply zone, so we would almost never take this. Yeah, Max, I think on the FX Street website. I haven't looked where in a little while, but I'm sure FX Street is with us. They can help point you in that direction. And, let me do this just because there's questions about all this stuff. Hold on. We're going to get back to the charts in just a second. Here's my email address if you have any, other questions or anything. There's plenty of material out there to look at, to make sure that, you have to make sure trading is for you. You have to make sure you understand the strategy and all that. Plenty of stuff to look at and think about before you dive in, too deep. Now, price, you see price falling pretty quick. Why? Well, there's nothing to stop it. We're inside of that white space, that area, right? You don't really have any significant demand until you get, down into here, but then it's really, so this is a demand zone that caused prices to turn, but really below this pivot low into that, into the area lower, these levels I'll show you. Well, it's those levels in the NASDAQ. Okay, it's those levels in the NASDAQ, right? So yeah, if prices went higher, because at the end of the day, you're asking is where should we short and where should we buy, right? So according to the strategy, there's probably some supply left here. You have two fresh levels on top of each other up here, so those would likely be higher probability shorting opportunities. And that's above all the recent price action. Okay, so we're out of this range, which is what we want to be, out into fresh territory. And then the downside, you don't really have any, what appears to be any significant demand until below 32, 32. Okay. So the other market, the market that we've been focused on, even in these sessions here, we focused on it quite a bit, is the Russell. As far as the equity index markets go, we focused on the Russell a lot. Why? Because it's been the weakest of the equity index bunch, and it's the one that's had the supply zone above. I think I told you I took this trade above. Anybody else take this trade also on the Russell? Maybe in the futures, maybe IWM, ETF puts, what have you. But anyway, price turned nicely from our daily supply zone. We see that we have a lot of rooms, to fresh, larger time frame demand below. So that suggests the markets can still push lower. And then we've had a couple of intraday levels that have popped up. If anyone missed that and wanted to rejoin the trade. Now, not, these are lower probability levels, of course, but the 16, let me blow this up. Yeah, the 1653 or 54 up here is still a fresh level. Yeah, let's call that 54, 1654 in the Russell. Now, this is a big money market, so with any of these markets and any of these opportunities we go over, make sure you completely understand the risk and you're completely okay with the risk, right? Yeah, so I see some of the questions. Whatever market we're trading, whether it's a Forex market, futures, stocks, bonds, cryptocurrency, you name it, it's all the same strategy with the same set of rules. Right? One strategy, one set of rules, and for any financial purpose. The time frames, Paresh, depend on what you're looking to do. Right? If you're focused on that daily income gain, you're going to be looking at the smaller time frames. There's a specific set of time frames you can look at. It's not like there's one time frame that's perfect or better than any others, right? We look at multiple time frames to quantify the supply-demand relationship. If you're looking for that, to try and produce that weekly income, it's bigger stuff, and so on. All right. Okay, we can move on to other markets. If you have another market, I know someone wanted to look at the dollar yen. Let's go look at that. So quick little picture at the larger time frame. Yes, the yen has been kind of weak, but it just keeps pulling back into this demand zone. Notice the picture of supply and demand is always the same. It's that pattern, that picture that represents the footprints of the big smart money, right? Banks, financial institutions, whatever you want to call it. All right, and there it is. But at the same time, even though we're rattling off larger time frame demand, we do have these two supply zones that we found on the 60-minute charts. This is a level right out of our sessions. And the 60-minute chart of the yen, we're looking at the yen futures here, by the way, but you can see the same thing on the spot. Price recently turned around 92.27. That's our supply zone here. Again, because price just touched the level and turned, we'd expect another turn out of this level if and when price gets up there. If it goes too deep into the level, though, we wouldn't use that level again. And then, of course, sitting just above that, if you're looking for something maybe a little higher probability, at the 92.53 area, we have some fresh supply. The nice thing is, look at the profit zone down to 91.28. Okay? So a lot of room in here between our key supply and demand zones, and that's ultimately what we look for. We also know in the back of our minds, if we're paying attention, that these demand zones down here are also in line with this bigger picture area of demand. So perhaps the buy side of the yen carries a little bit greater odds from lower prices. Does that make sense? Okay. All right. So, another way to think of the strategy is, when I was on the trading floor, one of the things I was pretty excited about was I thought, ooh, I'm gonna learn how, the big secret to how banks, professionals, and all that make so much money, and everybody else doesn't. Well, quickly you realize that it's not a big secret at all. In fact, all it is that what successful market speculators and banks and financial, what they all understand is that how you make money buying and selling anything in life is exactly how you make money buying and selling in these financial markets, right? In other words, we're talking supply and demand, we're talking financial markets, but at the end of the day, we're just finding wholesale and retail prices. We're looking at a chart of the yen here, but couldn't this just be a chart of anything? It could be a chart of a certain kind of car that we're buying and selling. The chart would still look the same. We'd see where wholesale prices and retail prices are. We'd see where demand exceeds supply and where supply exceeds demand, wouldn't we? So you really need to kind of have that same mindset because it all is the same thing. Probably one of, for example, Goldman Sachs, big financial institutions, right? One of their biggest strengths is that they realize that they're in the same business as Walmart or Amazon. They just, buy things when they're lower at wholesale prices and sell things when they're higher at retail prices. The only difference is the products. But at the end of the day, it's all just wholesale retail. So what is that? And then, of course, what does that picture look like on a price chart? And that's what that's what I've been going over with you here. So there's the yen. Yeah, there's plenty of kind of newer basic videos on the. I believe there's a bunch on the FX Street website, so you can look those up. Certainly on YouTube. I believe FX Street puts a lot of those on YouTube. Anyway, we have time for another market or two. Anyone else want to look at another market? Again, doesn't matter what market we looked at. We've covered a couple, 2 or 3 Forex markets. We've covered 2 or 3 equity index markets. And yeah, we can look at gold, but there's really not much to look at gold, and we're not close to a key opportunity. Yeah, we can take a look at the pound. All right. So again, larger time frame, and these are all the setups I'm showing you now are from the daily sessions that I do every morning. But let's take a look here. Okay. So here we have we're looking at the daily chart, so you can see we keep bouncing off our demand zones. We hit our supply zone once, but now price is kind of moving back towards the middle, right? So we need to be careful with the pound in the big picture because the chart is suggesting price is kind of back in here. I know we've only been together for about 40 minutes, but is it starting to kind of make sense? I know some of you are new to this and no one's expecting you to get this for the first time. But again, let me go back to the chart. Here's the daily chart of the pound. Here's our demand zones that we've been going over for a while in here, our supply zones we've been going over for a while. And we can see where price is now. So in the big picture, we've gone from up here to down here, and now we're somewhere back in here. So it's important information. We'll go to smaller time frames now in the pound, but it's important to know where we're at bigger picture. We just need to be a little careful here because of where we're at location-wise. Okay, so let me take you down to a smaller time frame chart. Here we go. So now, before we get into these zones, because we just saw where price is at in the pound in the big picture, now we have some supply and demand zones we can possibly trade off of here in the smaller time frames. Should we go with full risk? Should we be risking the same amount of money here or the same percentage of our account here as if we were out, closer to one of those larger time frame supply demand zones? Right? What do you think? No. I mean, you're free to do what you want, of course, and always nothing more important than the risk. But you see my point? Because we started out looking at the larger time frame, and we see that price is somewhere in here, not down here like it was, not up here like it was, but somewhere in here, probably not a good idea to risk the normal amount of money as you do on a trade in here. However, when we come across an opportunity that's where price is down here or up here, then nothing wrong with risking the amount of money that you're willing to risk on a quality trading opportunity. But Parrish, no, I wouldn't agree with that. Parrish is saying short time frame, take less risk. No, that's not, because you could have a great level that's out here on a small time frame or up here. It all depends on where you're at, where that market is at. Okay, we can go over that more another time. Again, for some of you getting this for the first time, I deliver morning sessions to people that have been in these sessions for years. So no one's expecting you to get this and perfect it in a 40-minute session here at FX Street. But if anything, maybe we open your eyes to a new way of looking at this. And all we're suggesting here is prices move in markets based on a supply and demand relationship or equation, this ongoing supply and demand relationship or equation, right? That's what's responsible for the movement of price in any and all markets. Opportunity exists at price levels where that simple and straightforward equation is out of balance. Okay. Good question, Henry. Do we wait for reversals or confirmations? No. Let me ask you this. And again, I would suggest that, if you think about this the same way, here's what you need to realize. How you make money buying and selling anything in life is exactly how you make money buying and selling here. And we just said that a few minutes ago. But if, would you ever walk into a car dealership and say, look, I know that car right there is $20,000, but I like it so much I want to pay you $30,000 for it. Would we ever do that? Of course not. And I know you wouldn't do that either. But why is it that people have that mentality in the trading markets, in the financial markets? There's a reason. Most people don't want to buy when prices are down. Most people don't want to sell when prices are up in the trading markets. Yet anywhere else in life, that's exactly the action people want to take, and they should. Don't forget, let me leave you with this. There's a reason why professionals, Wall Street professionals, big banks, institutions make so much money, and most people don't. Right? Okay, so yeah, so we have this zone right here. Actually, on a smaller time frame, there's a little level inside here that's decent, but obviously this upper zone is going to be higher probability, the 133.71 up to 134.21. Right? We have the picture that we're looking for. We have a gap, and a gap represents quite a big supply-demand imbalance. Think of how far price is going to have to travel to get there. So think of who would be buying at 133.71, right? Someone who's buying after a strong rally in price, not a smart move, and into a price level where supply exceeds demand. Again, not a great idea. So we may, if you're okay with the risk, we may want to be the seller to that buyer, as there's a nice profit zone down to the 129.20 area of demand. Henry, you're asking another great question that we're probably not going to have time to answer today, but trend. No, so I don't really focus on trend, the strategy. Remember, any key trend begins and ends at a supply or demand zone, right? We don't want to wait for prices to turn significantly and then get in. All that happens there is your risk is going up and your reward is going down. Okay. All right. So I know we're out of time, but there's my email address if you have any questions. Hopefully this was helpful. sam.seiden@tradingacademy.com. Happy to help where I can. And again, with anything, don't ever jump into any new strategy or anything until you completely understand it, until you make sure you understand the risk and all that. I can't tell you how important that is. People take on risk way too early and way too often, and they shouldn't. Anyway, have a great day, everyone. Great to be with you, and we'll see you next time with another session, I think, coming up soon. All right. See you soon.